We are going to be discussing one of the hottest companies in the stock market at the moment. And this is not just me trying to create a YouTube thumbnail. The numbers actually prove it. As of 13th of October 2025, Bitmine Emergent Technologies, or BMNR, is the 22nd most traded stock in the US stock market, trading at $3.5 billion per day on a 5-day average. Now, for those of you who have stuck around over the last couple of weeks, despite the uploads being a little bit slower, you would have realized that perhaps sometime around 4 to 6 weeks ago, I've opened a position in this company, and it was one of those companies where I have decided to invest, then investigate. Now, over the course of the last 4 to 6 weeks, I have decided to, finally increase this position to become a bigger part of my portfolio. And in this video, we're going to explore some of the reasons why I have taken on the decisions and some of the risks involved in this investment. But as always, potential is a dangerous word. So let's dive in. Now, before we begin, I do want to put it out there that I will once again have to be away in the month of November, but I will be much better prepared this time around, and I'll bring along with me a mini live stream setup. Now, with that said, I am also thinking of bringing back 10 stocks in 10 days, season 2, but more on that later on. So, with Bitmine Emergent Technologies, or ticker symbol BMNR, they are a digital asset blockchain technology company, and that initially, right, they were engaged in the mining of Bitcoin. However, they recently pivoted their business model and initiated the Ethereum treasury strategy led by none other than Tom Lee. Now, I know all this information is already readily available out there, so I don't want to spend too long talking about this. But the reason why I feel like I still have to cover it is to give those of you who are perhaps newer to this investment an idea of this company and their business model and how they make money. And if you take a look at their prospectus, the entire business model revolves around issuing debt or equity securities and the ability for them to participate in other forms of raising capital in order to buy more Ethereum. And to judge the success of the company, the metric that BMNR has told us to track is actually the ability for BMNR as well as Tom Lee to increase the amount or the number of Ethereum per share. And so this really begs the question, why would someone actually buy BMNR over outrightly buying Ethereum? Now, I think there are a couple of layers to this answer, and I'll be giving you high level understanding first before diving into the nuances of this discussion. However, I think the first thing you have to consider is that as institutional investors, not every institutions allow the portfolio that they're holding on the fund that they're managing to actually custody crypto. However, if the fund or the fund manager still wants exposure in the crypto space, then BMNR basically acts as a proxy for Ethereum for some of these institutional investors, right? So they're able to gain exposure to Ethereum without actually having to custody the crypto itself. Now, secondly, something that actually benefits both retail investors as well as institutional investors is the liquidity of BMNR. We have actually mentioned earlier on that BMNR is actually a highly liquid asset, and this means that it's easier for institutional investors to hedge their positions as well as for retail investors who wants to use different option strategies like the wheel strategy in order to generate an income for themselves while still holding on to these investments. And you can do that with BMNR, and that is something that you are not able to do if you are holding Ethereum on your own, right? And at the same time, for the retail investors, the ability for BMNR to actually raise capital at a faster pace than what we can do as an individual investor means that they're able to increase the Ethereum per share at a faster pace than we can. However, there is a little bit of an asterisk over here that I don't believe people have really spoken about enough. And I'm going to play you out a couple of different scenarios in order to, really answer the question, why would someone buy BMNR over Ethereum? So I'm going to be giving you the concrete, no BS answer to whether or not it actually makes more sense to be buying Ethereum outright or to buy BMNR stock. And to add a little bit of nuance around this whole concept of increasing our Ethereum per share, because people, tend to about it as if it is some sort of cheat code, and it is not, because as with anything in finance, it is only a cheat code because you haven't realized the risk or the downside. And so in this example over here, I'm going to be using an arbitrary price of Ethereum of around $4,000, and then just for the sake of calculation, assume that the price of Ethereum doesn't change throughout this process. So assume on day one, you have $4,000, and you can choose one of two things, right? You can use the $4,000 to buy one Ethereum. Now, for simplicity's sake, let's also assume that you got into BMNR on day one and your first purchase of BMNR was done basically at $4,000 at spot price. You didn't have to pay a premium over the price of Ethereum. And so the first $4,000 that you invested into BMNR goes fully into buying one Ethereum as well. So at the end of day one, if you bought ETH on your own, you would have one Ethereum in your wallet. If you bought ETH through BMNR, you would also be owning one Ethereum through the shares of BMNR. But when the difference really comes in is on the second purchase. So let's imagine, 10 days pass, right? You have another $4,000 and you want to buy another ETH. And if you're doing so on your own, you deploy the $4,000, you would now be the proud owner of two Ethereum. However, let's say if you are someone who have decided to purchase Ethereum through BMNR, what would actually happen is that because of the liquidity that BMNR provides to institutions, because they are a security on the stock exchange that allows institutions to gain exposure to Ethereum without being in the crypto itself, because of the ability to use derivatives to hedge their position on BMNR, and because of BMNR's just general ability to raise capital, the share price trades at a premium to the price of Ethereum. And so let's say this premium is 25%. So what does this mean, right? It means that if Ethereum is worth $4,000, then BMNR should be trading at around $5,000 in order to be worth one share of Ethereum, right? So Ethereum is $4,000, 25% more of $4,000 is $5,000. So that means you have to give BMNR $5,000 in order to buy $4,000 worth of Ethereum. However, because in our scenario over here, to make everything equal, on day 10 you only have $4,000 to invest into BMNR. So with this $4,000, what it means is that if you take $4,000 and you divide this by 5,000, you would actually be only adding 0.8 ETH into your holding, which means that's how I get this 1.8 ETH Ethereum over here, right? So let's make this very clear. If you're buying Ethereum on your own, day one, $4,000 spend, one Ethereum. Day 10, another $4,000 spend, two Ethereum. However, with BMNR, day one, $4,000 spend, you gain one Ethereum. However, on day 10, because it is trading at a premium, right? Ethereum might be trading at 4,000, but BMNR itself is trading at a premium, perhaps let's say $5,000. Because of that, your $4,000 that you invest into BMNR will now only be able to buy you 0.8 Ethereum, which means you actually own less Ethereum buying BMNR than buying Ethereum outright. Now, at this point, you might be saying, wait. Is BMNR not supposed to be buying Ethereum at a faster pace than me? Because from this example, it seems as if that, BMNR basically buys Ethereum at a slower pace than me. Then why in the world am I buying BMNR? And I think that this is something that many people who want to parrot their own narratives, either they're bullish BMNR or they're bearish BMNR, they will just tell you one side of the story. Those who are bullish will tell you that BMNR can accumulate ETH per share faster than you can. Those that are not able to will show you this calculation and then tell you that, you see, you can actually buy ETH at a faster pace than BMNR. The real nuance is somewhere in the middle. I think by virtue of the fact that BMNR trades at a premium to Ethereum, you have to know that for every dollar you buy of BMNR, it gets you less Ethereum than outrightly buying Ethereum. Okay, I'm going to say that again. By virtue of the fact that BMNR trades at a premium to Ethereum, it means that every dollar that you invest into BMNR will get you less Ethereum than outrightly buying Ethereum on your own. So you see the statement that BMNR can increase the Ethereum per share faster than I can as an individual investor. This is a conditional statement. It is contingent on two things. It is contingent on BMNR always having a premium, and it is contingent on the fact that you will eventually run out of money faster than BMNR. So let's play out this scenario even more to show you what I mean. So let's fast forward a month. Now it's day 30. And let's say you run out of money, but the price of Ethereum is now $5,000, as you can see over here, right? Price of Ethereum, $5,000, which means the two Ethereum that you are holding on hand would now be worth $10,000 because two Ethereum, $5,000 each, $10,000, right? Now, remember, if you are owning the shares of BMNR, you would only have 1.8 Ethereum. So over here, what you get is you get 1.8 Ethereum multiplied by $5,000. And so if you are owning the shares of BMNR, you would be only be owning around $9,000 worth of Ethereum. But you have to remember that BMNR trades at a premium to the price of Ethereum, and it trades at a 25% premium. That's what we're using for this example, right? So a 25% premium over this means you're using 125% multiplied by $9,000, and that's how you get $11,250. And so what this means is that investors are paying $9,000 for Ethereum plus $2,250. Oops, over here, $2,250 as a premium for BMNR's liquidity and their ability to execute. And so, because of that, when Ethereum rises from $4,000 to $5,000, despite in both situations you're making an $8,000 investment, the value of ETH in the first scenario when you're investing on your own will grow from $8,000 to $10,000. However, the value of your BMNR shares will go from $8,000 to $11,250. Now, this is good on the way up. Like I said, this is a double-edged sword because on the way down, the opposite effect would be true, right? You would actually lose more money holding BMNR than holding Ethereum. And I do believe that, this first example shows you something that is a little bit of a misconception, right? BMNR doesn't necessarily need to increase its ETH per share faster than you in order for you to net a bigger profit from your investment because of the premium that it is trading at. However, this also means that at any point, if it loses its premium, then this strategy could be dilutive to shareholders. Because imagine if ETH was trading at $5,000 without the 25% premium, you would be only owning $9,000 worth of Ethereum instead of $10,000 of Ethereum if you would have just bought Ethereum outright. And that is the risk that shareholders of this company have to appreciate, which means that as the stock price goes up, or not stock price, as the price of Ethereum goes up, of course, that will actually multiply your gains. However, if the price of Ethereum goes down, that will also multiply your losses. And that is something that all shareholders of BMNR need to be aware of. But I'll cover a little bit more about the risk and the calculations later on. Because at this point, some of you may be wondering, so is it totally not true that BMNR can increase their ETH per share faster than me? Because from the looks of it, it seems like I have 2 ETH per share. BMNR only gives me exposure to 1.8 ETH per share. And the answer to that is definitely not, right? BMNR can increase the Ethereum per share faster than you in some conditions. Now, the assumption over here is that eventually you are a normal human being that will run out of money and cannot raise capital every single week without stopping at the same pace that BMNR can. So at this point of the story, you have perhaps made 2 purchases of ETH. You own 2 ETH in your own wallet. However, as an investor in the BMNR, you would only own 1.8 ETH. So at the end of, let's say, another 10 days, let's call it day 40, you run out of money, but BMNR or BitMine can still go out there, raise money in the capital markets to buy ETH at $5,000. So let's say they found another 10 investors to each invest $10,000 into the company. With this $100,000, they actually use this $100,000 to buy ETH at $5,000. So if you take the $100,000 divide by 5,000, you basically get 20 ETH, right? So BMNR takes this $100,000, goes and buy this additional 20 ETH. Now, at the start of this example, your one share of BMNR entitles you to 1.8 Ethereum. However, with this 10 investors coming in with $10,000 each, this 20 ETH will now be shared among you and the other investors as well, which means that each of you will get an additional 1.8 Ethereum per share. Right? Of course, this also means that your initial 1.8 ETH that you own needs to be divided by 11, but we will not go into that so detailed right now. You just need to know that, you see, because on day 40, as an individual investor, you cannot buy any more Ethereum because you ran out of money. But BitMine can go out there, raise capital, use that capital, buy more Ethereum, and then divide it equally among shareholders, which increases your ETH per share. Now, I know a lot of people at this point in time may say that isn't this just a Ponzi scheme? They issue shares, dilute the existing shareholder base to buy more Ethereum, and then it's on contingent on this, very fluffy premium that they have. And to me, at least, it is not a scam, and I'll explain why later on, because this is a mechanic that is actually already prevalent in the stock market in another form. We just don't realize it. But right now, what I really want to do is to explain to you the mechanics behind how BMNR actually manages to increase our Ethereum per share. Remember the example that we just spoke about the 10 extra investors investing $10,000 each, and then you use the $100,000 to buy 20 ETH? So this 20 ETH have to be divided among you plus the 10 other investors, as well as you have to remember that 1.8 ETH that you own by buying BMNR stock will now you also need to share it with these other 10 guys, right? The math there gets a little bit complicated. So I'm going to be using a very simple example to show you how this is not a Ponzi scheme. If like I said, this is a conditional if BMNR trades at a premium. Now, to help us understand BMNR, I'm going to start at a place where everybody should be familiar with. It starts by understanding a pizza shop opening up in a new neighborhood. Now, let's call this pizza shop B. So this pizza shop sells pretty affordable pizza at around $10 for the entire pizza, right? So this pizza that they sell can actually be cut into 10 equal slices. Now, because this pizza shop are new, they plan to give out 10 coupons to 10 lucky winners in order to claim a free slice of pizza on the opening day. So if you take a look at this sentence over here, a pizza shop has one whole pizza. They plan to share it with 10 people, which means that each of the coupon holders will get 10% of the pizza, or 1/10, right? Because the whole pizza cut into 10 slices, each one get one slice of the pizza, that's 1/10. Now, if the entire pizza is worth $10 and you cut it into 10 slices, which means that every single slice of the pizza thereafter would be worth $1. So, like I said, because the pizza shop is new, they gave out 10 coupons to 10 lucky winners. They can claim that one slice of pizza on opening day. But some of the winners were not able to make it down on opening day and decided to sell their coupons. Now, what they actually realized is that when they put their coupons up for sale, people were willing to pay $3 for a coupon that actually entitles them to a slice of pizza that was worth $1. Now, why some people are willing to pay $3 for a coupon that is giving you a pizza that is worth $1? Well, because they perhaps did not want to queue in order to get the coupon, or they did not want to participate in the lucky draw or whatever it is. For some, they were basically paying a premium because they were not able to get the coupon, or they did not want to try to get the coupon initially, but they still want a slice of the pizza. Now, realizing this, what the bakery actually did is to create an additional 10 coupons. Now, they value each of these coupons now at $3, and they try and sell these coupons to another 10 customers. And by doing so, the bakery actually raised $30. Now, this capital, this $30, can then be used to bake another 3 pizzas, right? Because if one pizza costs $10 and the bakery raised $30, they can take the $30 to bake an additional 3 pizzas. And so what we have on opening day is that right now, the bakery will have 4 whole pizzas to give away, the one that they initially planned to give away, plus the 3 new pizzas that they actually can bake because of the $30 raise. But instead of giving away to 10 customers, they now have to give these 4 pizzas away equally to 20 customers. Now, what happens is that each of these customer gets 2/10 of a pizza, or 20%. Now, how does this math actually works out? If you imagine one whole pizza has 10 slices, 4 whole pizza means that there are 40 equal slices. Now, 40 equal slices of pizza shared among 20 customers would mean that each customer gets 2 slices, or 2/10 of the entire pizza. So despite having more customers, because the capital raise allowed this pizza shop to bake more pizzas than the number of customers, each customer or each coupon holder was actually entitled to more pizza than if the pizza shop did not do anything at all. And that is the premise of BMNR, because it actually shows us 2 things. Now, obviously, the first concept that you have to understand is that the initial 10 customers who received the coupons benefited the most, right? They didn't have to spend extra money, and they're getting that extra slice of pizza, right? So initially, their coupon was only worth one slice of pizza. Now, because of the additional raising of capital, their coupon will now be worth two slices of pizza. Now, for the people who paid $3, obviously, the deal that they got was not as good as the people who initially got the coupons when the pizza was only worth $1. However, by buying that, instead of spending $3 for one slice of pizza, they are now paying $3 for two slices of pizza. So they do benefit, just not as much as the people who were initially in this investment. And so that is how BMNR actually increases your Ethereum per share without you having to do anything. The longer that you hold it, the more capital that they're able to raise, the more accretive this becomes to your Ethereum per share. But like I said, the condition over here is that BMNR needs to issue shares at a premium to its net asset value, or the amount of ETH that they have. And so this entire business model of BMNR will work only if they can continue to issue at the money stock at a premium to its net asset value. Now, this sounds very complicated, but it's basically the example of what I was telling you earlier, right? The pizza shop actually values one slice of pizza at $1, but as long as people are willing to pay $3 to buy the $1 worth of pizza, they are able to bake more pizzas for their customers, and this strategy will work. Now, people ask, what if the premium runs out? And I'm telling you right now, eventually, one day, the premium will run out. And this is nothing to be concerned about, because that is just something that is built into the business. Premium, we do expect it to contract over time. At some point in time, it may even turn negative, especially in a bear market. But as long as it's not for an extended period of time, it is perfectly fine. But I think as an investor, what we need to be able to do is to identify when are the certain points in time when BMNR could perhaps lose their premium. And that could happen in three ways. Either Ethereum rises too quickly, or Ethereum falls too drastically, or there's some sort of execution risk where the market sentiment towards Tom Lee and BMNR shifts, and they feel like they are no longer able to basically increase their ETH per share in a accretive manner. So in order for me to explain this clearly, I want to go back to the example of the pizza shop again. I'm going to depict this in three different scenarios, using what we have, or where we actually left the story, right? So let's call the initial story that we spoke about the base case. I'm going to be depicting this in gray over here. Then the worst case scenario will be depicted in orange, and the best case scenario will be depicted in green over here. So just a refresher, in the last scenario where we left the story, the pizza shop sold an additional 10 coupons at $3, raising $30 of additional capital. And because the price of a pizza is $10, they were able to bake an additional 3 whole pizzas to be shared with the 20 customers, which means now there are 4 pizzas, the one that they initially planned to share, plus the 3 additional pizzas to be shared among 20 people. And this would mean that they each receive 2/10 or 20% of a pizza, right? Which means 2 slices. Now, I'm going to be using percentage over here, so it's easy for you to actually make the comparison rather than, actually show you the fraction. Now, in the worst case scenario over here, right? Why is the worst case scenario happening? Let's say perhaps, the cost of cheese actually goes up, the cost of flour goes up, and your chef demands a higher pay. And so, because of that, if the shop sold 10 coupons at $3 to raise $30, but the pizza end up costing $60, what this means is that the $30 of additional capital would be only able to bake an additional half a pizza to be shared with the 20 customers. Which means now, instead of having 4 pizzas, the one that was free initially, they now only are able to offer an additional half a pizza, which means there is 1.5 pizzas to be shared with 20 customers. And that would mean each of the customer would now receive 7.5% of a pizza, which is less than the initial agreement of one slice of pizza, because 7.5% of the slice is basically 3/4 of a slice of pizza. And there is where BMNR's strategy can be dilutive if they are not able to actually raise capital at a premium to its net asset value. Now, the best case scenario, which actually just happened over the weekend, is that the pizza shop goes out, raises the capital of $30 by issuing the 10 coupons to uh, at $3 to 10 other customers. However, the price of the pizza actually fell to $5 because they managed to cut some sort of deal with the cheese factory. And so, because the price of the pizza costs $5, the pizza shop can now bake an additional 6 pizzas to be shared with a total of 20 customers, which means right now there are total on opening day, there's going to be 7 pizzas to be shared among 20 customers, and each of them would receive 35% of a pizza, which is more than the initial agreement. Now, 35% of the pizza is basically just 3.5 slices of pizza. And so, if you think about it, the initial coupon holders holding the coupon that was entitling them to 1 slice of pizza will basically, gain the most, right? Because instead of 1 slice of pizza, they now are entitled to 3.5 slices of pizza. However, for the people who bought the coupons at $3, they are not shortchanged as well. They did not get as good a deal as the person who got in initially. However, their initial $3 buy of the coupon will only give them 1 slice of pizza. However, $3 by spending $3 to buy the coupon now would actually give them 3.5 slice of pizza, and that is why, as long as the pizza shop, in this case BMNR, is able to raise capital at a premium to its net asset value, this strategy can be accretive to shareholders. And so this is exactly, like I said, what was happening over the weekend, right? Over the last couple of weeks, Tom has been raising capital, even up to $70 per share, despite the share price not actually going there. People were willing to pay up to a 40% premium over the share price. Now, the share price, like I said, is already trading at a premium to the net asset value, but on top of the premium of the share price, institutions who really wanted to get in on this investment were willing to pay an extra premium over it. And that is why he was able to raise capital at $70 per share and issued warrants at around $87.50 per share. And at the same time, over the last couple of weeks, the stock price, BMNR stock price, was hovering in the high $50 to $60 range. All the while, ETH was trading in the $4,500 range. Now, when Trump did his thing last week, tweeted the whole China debacle, and ETH fell to the 3,700s, Tom Lee bought the dip. And in the most recent press conference, we can see that BMNR now owns over 3 million Ethereum, more than halfway to their 6 million target. Now, so I will be talking more about the narrative around BMNR and Ethereum in a future video where we break down what has to happen in order for BMNR to be successful. Because, like I said, this strategy that we have spoken about, we have shown you how the mechanics of this strategy actually works. But this strategy itself will not be successful if Ethereum or the whole narrative around Ethereum doesn't play out. However, there is one thing I feel like I still have to address, and that is the MNAV. Now, many people are saying not to touch this stock with a 10-foot pole because eventually the MNAV will contract and BMNR will not be able to run this strategy anymore. And I think you have to accept that at some point in time, the MNAV will eventually erode, but that is not their only way to grow their ETH per share, right? So, like I said, this is true to a certain extent, but they do have other growth levers, which I will talk about in a separate video, and Tom Lee has spoken about it before. But at least to me, this MNAV that it is currently trading at is no different from a stock trading at a certain PE ratio. So not buying BMNR today because you think that the MNAV will contract in future is like saying you're not buying Apple in 2012 because eventually their growth will slow and their PE ratio will contract. And so yes, eventually Apple's growth did slow, and eventually it is correct that Apple's PE ratio contracted, but after they significantly grew their EPS. And so similarly, I think in BMNR's case, possibly the MNAV would contract as well, only after they have significantly grew their net asset value. So I think, the multiple contracting is not a sufficient reason for me to stay away. I think if you have some structural concerns around Ethereum or fundamental concerns about, the moving of Wall Street onto the blockchain or the tokenization of Wall Street, then I think that would be a genuine concern for someone not to be involved in the company, at least for me, right? But like I said, you do you. This is your own decision. I'm just showing you the mechanics of what BMNR is doing and how it is accretive to shareholders. Now, like I said, the assumption over here is that they are able to offer this at a premium, and at the same time, the narrative around Ethereum must play out. Now, this narrative around Ethereum is something I'll be covering in a future video because, like I said, right now, I think what is important for us is to understand the metrics around this company and to be able to use that in our valuation process for this company as well. And that is what I'll be talking about next. And I will see you in the next one.